For the past few decades, China has been expanding its economic influence globally, but no region feels this impact as intensely as Africa. Today, China is Africa's largest economic partner, surpassing the US and Europe in trade volumes and investments. With the construction of ports, bridges, and roads, China is reshaping the landscape of African countries, leaving its mark everywhere. But what's really behind this active presence? China is investing billions of dollars into infrastructure projects and leads in extracting Africa's resources. But this is not simply a partnership. Many experts are asking, is China an ally to Africa or a new form of neo-imperialism? To answer that question, let's explore what China gains in return for its investments and how this affects African nations. From natural resources to debt obligations, China's strategy in Africa is complex and multi-layered. China's massive economy requires a steady flow of resources. From oil and copper to cobalt and rare earth metals, China needs them to sustain the manufacturing and technology that powers the world. Africa is a treasure trove for these resources. Every year, China imports over $100 billion worth of goods from Africa, with a significant portion being oil and minerals. For example, China sources almost 50% of its copper from Zambia and the Congo, and over 70% of the cobalt used in batteries comes from the Democratic Republic of Congo. In the past decade, China has increased its resource imports from Africa by over 60%, reaching $120 billion annually, while the US and Europe are scaling back and focusing on other markets. China is capitalizing on Africa to secure its supply chain, turning the continent into a critical pillar of its economy. But what are the consequences of this dependency? Can African countries control their resources and benefit more, or does this arrangement only serve China's interests? The question arises, why haven't the US and Europe, who have long-standing ties with Africa, become the continent's primary creditors and economic partners? The answer lies in history and politics. While China actively invests and builds infrastructure, Europe and the US focus on humanitarian aid and ethical standards. According to reports, EU countries allocate over $20 billion annually in humanitarian aid to Africa. However, this money goes toward education, healthcare, and poverty alleviation, not large-scale economic projects. For instance, in 2022, the US directed around $15 billion to Africa in humanitarian aid, but only $5 billion toward infrastructure investments. Unlike the West, China takes a no-strings-attached approach, overlooking political and environmental concerns. Over the past 10 years, China has invested more than $200 billion in African infrastructure projects, while the EU and the US together invested less than $50 billion. This has allowed China to secure a dominant position in African trade. China offers African nations loans with favorable terms, promising quick results, while the West, wary of criticism, continues to focus on social projects. But this approach creates a new issue for Africa: dependence on Chinese loans that are difficult to repay. What will be the consequences for Africa if it remains tied to debt obligations to China? Despite the billions of dollars China invests in Africa, many Africans are dissatisfied. One of the main issues is the quality of Chinese goods and employment practices on Chinese projects. Africans often complain about the low quality of Chinese products, from electronics to textiles. Studies show that up to 60% of consumer goods in African markets are imports from China, but their durability and quality often fall short of local standards. Another issue is employment. Instead of hiring local workers, Chinese companies bring in their own specialists. For example, on a major construction project in Kenya, about 40% of the workforce is Chinese, despite high local unemployment rates. The situation worsens when it comes to local unemployment. In countries like Zambia and Ethiopia, youth unemployment exceeds 20%, fueling frustration among the population. Rather than creating jobs for locals, China brings in its own specialists, leaving Africans without access to opportunities. This only heightens tension and dissatisfaction among the population. How long can African countries tolerate these conditions? But the issue isn't just with large corporations. In recent years, small Chinese entrepreneurs have flooded into Africa, bringing cheap goods and setting up businesses directly in African markets. These Chinese entrepreneurs sell goods at low prices, making them more affordable for Africans, but causing local vendors to struggle to compete. Cheap Chinese products are pushing local goods off the market. In some countries, the share of local goods in markets has decreased by nearly 30% over the past 5 years, and local entrepreneurs' incomes have fallen. Small Chinese traders bring in products that are often 20 to 30% cheaper than comparable goods produced in Africa. For many Africans, these conditions have become unsustainable. Local businesses are shutting down, and people's incomes are shrinking. The issue of Chinese expansion affects not only large companies, but also the simplest means of livelihood for African families. How long can local markets withstand the pressure of Chinese goods, and will Africa end up relying solely on imports? But beyond economic and social pressure, Chinese companies are also having a significant impact on Africa's environment. From mining to deforestation, China rarely adheres to the strict environmental standards required by Western corporations. For example, in the Congo, Chinese companies extract cobalt needed for battery production at sites where even basic environmental protection standards are often ignored. Water pollution and deforestation affect thousands of people and worsen the health of local communities. In countries where Chinese companies are involved in extraction, water pollution and deforestation levels have risen by 30% over the past 5 years. In 2022 alone, the estimated environmental damage amounted to over $2 billion. Many African countries hoping for economic development turn a blind eye to environmental issues. But how long can they continue when the cost of such progress is the destruction of ecosystems and the health of their people? This environmental crisis has already become a source of growing discontent with China's presence. Will African nations be able to protect their natural resources, or will they continue to pay a high price for economic cooperation? Hundreds of millions of tons of African resources leave the continent each year, heading to China. But once in China, these resources are turned into goods and sold back to Africans at a markup. Instead of building their own industries and technology, Africa imports products made from its own resources. For example, finished steel products and electronics cost 30 to 40% more than similar items made locally from African materials. For every $10 China earns from processing and selling African resources, Africa receives just $1 in return. As of 2022, African imports of finished goods from China reached around $150 billion, while raw material exports from Africa to China were only about $120 billion. This asymmetry in trade holds Africa back, depriving it of the opportunity to build its industry and control the revenue from its own resources. China reaps all the benefits without sharing technology or expertise, keeping Africa on the economic periphery. Can Africa ever break free from this dependency, or will it forever remain a market for Chinese goods made from its own resources? The rise of Chinese influence in Africa brings not only economic but also social tensions. Many Africans are beginning to realize that their countries are becoming increasingly dependent on China. In response to criticism, China is adjusting its strategy. To improve its image, China is now investing not only in resource extraction, but also in social infrastructure. Building schools, hospitals, and roads is part of a strategy to change how China is perceived in Africa. Since 2020, China has significantly increased its spending on social projects. In 2022, investments in infrastructure, including social projects, reached $60 billion, up 30% from 5 years ago. These projects are improving living conditions for millions of Africans, suggesting that China is acting not only for profit, but also for social impact. However, critics argue that such projects are just a facade for continued resource expansion. Is this a genuine effort to help, or simply a strategy to solidify influence on the African continent? And what will be the next phase of Chinese expansion? China's presence in Africa is a complex and strategic game, from resources and investments to influence over politics and society. But what path will Africa choose in the future? Some African leaders are beginning to reconsider their relationship with China, exploring options to diversify their economic partnerships. However, this is a challenging choice, considering that China remains one of the largest creditors and infrastructure providers on the continent. Currently, Africa's debt to China exceeds $182 billion, leaving African nations facing a difficult dilemma: to develop under China's influence or seek alternative paths and risk economic instability. Experts believe that in the coming years, Africa may choose one of two paths: continue cooperation with China, benefiting from its investments, or seek new alliances and partnerships to reduce dependency. Will African nations develop an independent strategy and leverage their position on the global stage, or will the continent remain under the influence of a new power? Africa's future depends on the choices its leaders make today.